Alrighty, traders. This is Blake Morrow. You are listening to the daily roundup. I hope everybody's having a great trading session. I am not going to lie. I am a little irritated. What the hell? Oh, shoot. Hold on. Oh, I don't know what happened. When I started the computer this morning, it gave me a message that my USB was not connecting. Something wasn't connecting, and I was like, USB is not connecting. That's weird. On one of my USB ports, and apparently it was the camera, because I went to turn it on and it didn't work. So it does work now. All right. Okay. Back to what I was saying, and let's talk about the markets. So, this move that we've seen in the dollar. Well, first of all, let me go ahead and just say a couple of things. I think the moves today were a little exaggerated. There's not a lot of liquidity. So as there's not a lot of liquidity, we've seen some of these dollar moves extend themselves. And I was just telling the people in the chat room, if you're not in the chat room, that this move like above this resistance here and above the 117.55 level in the euro dollar, felt like that was a stop run to me. The dollar Canadian, also came right down to support. Like you look at this move here. Let me grab some horizontal support here. Like this move here, we knew that support was right there because that's where we had drawn the support zone. But I think this move below this horizontal support really caught some traders off guard, because this really shows you the importance of looking left. Like when you're looking at a chart, you kind of got to continue to look left to find out where those key levels are. And if you're intraday trading and you're like, oh yeah, there's a bunch of support down here, so should be supported, and you're like, you put your stop down there and you get stopped out and you go, wow, why did it bounce there? Well, if you keep looking left, you'd realize that there's more horizontal support over in this direction, right? So and right here, right? So that's what I mean by, maybe people just didn't look far enough left intraday wise. But we saw the dollar really push against a lot of support levels against a lot of different currencies. I mean, you take the dollar Mexican peso, which is, one that I started acquiring here. It also broke through some horizontal support. US dollar Norwegian krona, you can see like this kind of flushed out some people as well. And so I think that a lot of this, these moves are, just some taking stops. But it's pretty amazing though. If you look at like, I mean, the dollar Canadian, this is a pretty amazing move, right? This big of a move, and to retrace and give it all back, that's pretty wild to me. And it's fine because I was long. I mean, I got long this morning, but I was long through a lot of this move higher last week, but I really didn't expect this much of a pullback over the last couple of days. Overall, we're still maintaining a pretty bullish look though, overall, because, higher highs, higher lows, all that, trend stuff. But at the same time, I think the fact that we gave back all of those gains, that was beyond my expectations. I didn't expect that. That's why, I sold some of the Kiwi yesterday, because I'm like, all right, these moves are going to moderate a little bit, but the dollar Canadian actually, moved quite a bit. But I'm fine. I'm happy being long right now. I picked it up at 88 at 125.88, 125.88 and some change. So, I'm fine with it being long right now. I'm not comfortable with it. I don't feel like, oh, I picked the absolute bottom, so I'm going to, I'm going to hang on to this for the next week. I don't feel like that at all. But by the end of the day, if the dollar continues to bounce back, and like let's say we close the day and the dollar Canadian above 126.40 or so, I'll feel really comfortable about being long, and then I'll be looking to add to longs going into tomorrow. As we get into a day ahead of Jackson Hole. Why is this important? And I want to talk about this concept for a little bit. And we're going to spend a little bit of time here, and I don't need to reference a bunch of charts to explain this concept. So when I trade, what I try to do is stay a couple of steps ahead of everybody. So what do I mean by that? If I think that expectations are overblown, which I do, that the Fed is going to take a step back and the Fed chairman is going to say, well, there's no reason for me to be hawkish right now, so I'm going to take a step back and, whatever. I don't feel that that's the case. I feel that the Fed chairman is going to, say, hey, we're peaking in the Delta variant. You can see it peak in different places, like, whether you're talking India, whether you're talking, Indonesia, and I was just talking to Lynn Halden about this yesterday, but you think about like the COVID, we're going to see COVID variants. Probably, I'm assuming the Delta variant isn't the first variant we're going to be dealing with. And I'm assuming as we go into fall, we're going to be dealing with the, whatever, Latin numeral and designation we end up giving the next variant that comes around. But as far as the Delta variant, it's probably run its course, right? Because you look at how the Delta variant is having less effect on the countries that it's had most effect on, over the last couple of months. So that means that the US will probably get past this pretty soon. So the Fed is not looking at the Delta variant going, oh my God, we're going to head back into lockdowns. They're probably saying, okay, well, we'll have to stay the course. I mean, there'll be some mask mandates here and there, but, job situation will probably be fine, blah, 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 blah. Inflation continues to be a problem. So we have to stay the course as far as, possibly tapering going into 2021. And so if they do, and they are, well, they stay the course, they're not dovish, because the market thinks they're going to tilt more dovish now. But if they don't, the dollar is going to rip. So how do you get positioned for that? For me, it's getting long today. Because if I can get long today in the dollar Canadian, I'm just using the dollar Canadian as an example. And let's say we hold above this trend line here, which that's where I'm going to get a little worried about the dollar Canadian. But let's say we hold above this trend line, and let's say by tomorrow, let's just use that as an example. By tomorrow, we're sitting here. We're trading at 126.50. Okay. Alex said 8 variants already named, so there are many more than Delta. Yeah, there's like Lambda, and there's all sorts of variants out there, right? But let's just say Delta seems to be the most aggressive and transmitting and blah 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 blah. Okay, so let's say by tomorrow or by Thursday, the dollar Canadian ends up at 126.50, 126.60, and it recaptures some of these losses. And then let's say on Thursday, Friday, we're just bebopping around these levels, going into Jackson Hole. And on Friday, the Fed chairman is, he seems like unfazed by the variant, and everybody goes, damn, he's still. It seems like we are going to taper in 2021. What are people going to do? They're going to start buying dollars, right? So if I'm long here, and I'm just using this as an example, the dollar Canadian, if I'm long here, And then I have to add to my longs somewhere around here, because following Jackson Hole on Friday, Fed chairman's kind of hawkish, and then the dollar Canadian starts to make its way back up towards, the 129 level. I already want to have a position in. So when I add, I'm going to have a good cost average. So I'm trying to position myself in a place where I have the ability to capitalize the most on a hawkish FOMC, chairman. Now, that doesn't guarantee that that's what's going to happen, obviously. But the way I look at it is, if it does get here, like let's just, again, using my example, let's say Wednesday, Thursday, we are right at these levels, above 126.50, but staying below 127. But I'm long down here, sub 126. Then if I'm wrong, my worst case scenario is I'm going to get stopped out, maybe for break even, maybe even for a slight profit on a smaller position. Or if it just wildly moves and blows through my stops, it'll be a smaller position because I didn't add to it, right? Because my addition, if I add to my dollar Canadian, it's going to be Friday after the, Fed chairman speaks, or maybe after inflationary data, whatever, right? Does it make sense? Do you guys get what I'm saying here? Like, I'm trying to position myself for an event for Friday, because I do think that the market's like, oh, the market's theme was, for the last couple of days, oh my God, they're moving Jackson Hole to Jackson Hole to an online event. They're definitely worried about COVID, and they're going to be super dovish. So let's buy stocks and sell dollars. That's been what the market's been thinking since Friday. I don't think that that's really going to be the case. I think they're going to brush it all off, and, they're going to stay the course, if you will. So I hope that made sense. And Gavin said, yep, and you can reduce the risk of the first entry to pre-Jackson Hole if you want to that stop. Yeah, I mean, if the dollar Canadian bounces here, then that's great. And I'm not sure it's going to. I mean, it may come down and take my stops below this trend line. But I'm trying to put myself in a position like that. And that's what, for me as a trader, I try to think a few steps ahead and say, okay, how am I going to get it? I do this for jobs reports too. It's NFP. I got NFP coming, and I think it's going to be a, strong jobs report, and it's going to be a blowout number. Great. Where's the best place for me to be long the dollar a few days before the jobs report? Like, I'm looking at Jackson Hole thinking, okay, hey, this pullback in the dollar is kind of giving us opportunities to be long, on a not so dovish Fed, right? So anyway, that's really what I wanted to cover. And just so you guys know, I'm long some US dollar Norwegian krona, not positioned really well in here. My average is like right at the 891 level. It's fine. I'm bullish this overall. I picked up some dollar Mexican peso because I'm playing this bull flag pattern. I'm long at 20, 30 basically here. And then I'm long dollar Canadian. And see, I'm trying to position myself long dollars ahead of this event. So hopefully we see a little bit of move. Lorraine asked about the Aussie. I'm not trading the Aussie right now. Well, I take that back. I'm actually long pound Aussie, but I'm not trading the Aussie dollar. And I just bought that this morning. But I'm not shorting the Aussie. I don't want to dip into the Aussie again. I think I shorted the Aussie. What is it? 73, about 73 and a half. And I think I covered somewhere down here, and I was pretty aggressive, like 72 and change. I forget when I covered it. If we came up and tagged this previous support here, right here, this dotted line, I might short it, but I can't be long every, like for me, I can't be long the dollar against every pair either. I like to spread it out a little bit, but I can't be doing everything. You know what I mean? But the Aussie I still feel is very bearish while we're still below, 73 cents. That's had a hell of a recovery. It's very much like the Canadian. It really ran up on the heels of that New Zealand RBNZ headlines from last night, which is so silly. Anyway, all right, guys. One last thing I want to bring to your attention: Bitcoin. Be careful of Bitcoin here. The market was so everybody was very loud about Bitcoin being back above 50,000. I saw article after article after analysis of Bitcoin above 50K. I'm thinking anybody who's long from the last couple of days are positioned poorly now. So we could drop back towards the 200-day moving average, maybe back towards this 43, 43.7 or so. So just be careful if you're on the long side with Bitcoin or these cryptos. I think they've the bullish run. It was a little bit poor positioning over the last couple of days. So that and remember, we completed AB equals CD move. All right, guys. Thank you all for your support. I appreciate all of you, and I'll see you tomorrow. And be careful around these summer trading days. It's the doldrums. Remember, these moves. I mean, like, it's great that we're getting some volatility, but these moves happen, and you're just like, wow, that came out of nowhere. It's lack of liquidity. So don't get yourself into too much trouble. Remember, cut your losses short. Try to let your winners run a little bit. All right, talk to you soon. Bye-bye.